Tuesday, October 22nd, 2019. Day trading recap. Today was kind of a heartbreaking day in a way for me. Now, I didn't lose any money. I made money on a trade, but I kind of pulled out too early and missed out on a chance for some pretty good profits on one of my trades. And then I didn't pull the trigger on another trade that ended up could have been just a monster. So it's one of those days where you let fear take over. You get a little too cautious maybe, and get you out of a good trade too early. So that's what happened to me. I'll show you the only trade I took today, and I got out way too early, and that was, I'll show you where it popped up. It was a gapper. I actually think it popped up in my volume alert. Gappers up down. This is trade idea software. LBTYK. So you can see where I got in and out kind of quick, right? And then you can see what I missed out on. But this popped up because it was a gapper. Obviously, it was in my gappers list. So today you could see that it gapped down, right? This is today's candle, and it gapped down from here. So I was watching it because it had a decent amount of volume, and right off the bat, from the beginning of the day, it was moving down a lot. So I couldn't find an entry to get in here. It was just moving too fast. Maybe the spread was too big, but I wanted to watch it because it was moving down harsh. You can see that. Look at this harsh little move right here, right? This is just not. You don't see this very often where it moves down this fast with this much volume unless something's moving. And I don't really even know what the news was. Something was going on, but I mean, that's a boom drop right there. I mean, not a ton. I mean, it's not. This is less than, I think, about $1 move down. But for this stock, a $20 stock, that's pretty significant. It's a good percentage. So I watched it bounce here, and I watched it regain the 8 EMA here. And then it held it with this little doji, this little indecision doji resting right on the 8 EMA. And if you look at where VWAP is too, it regained VWAP at the same time, right? So at 1025, it regained VWAP, and it also regained the 8 AMA. Then it rested on it. So I got in right here at 2298, and it started to move up, had a couple topping tails. I think that's kind of what threw me off. And it started moving up, and this is a pattern I like to see. This is one I've been recognizing and trying to enter trades when I see it. Are stocks that are down really quick, and then they start to make this little shelf pattern. I think there's a name for this. I'm not really sure what it's called. I think it's like a teacup or cup and handle maybe. It's a little harsh for that, I think, but it essentially does the same thing. It's down, and then it comes up, and then sort of rests a little bit here. And using this moving average as support is always a good sign. And so I got in at 2298, right below a whole number, 23. And then I just got out at 23, was it 11 or? Yeah, it was like averaged out at 23.11. A 13-cent gain, which is nothing, is nothing to be upset about, but it's just not what it could have been. You can see my risk to return. So I said my stop would be about 22.87. And so, basically 11 cents. So you'd want the return to be about 22 cents from where I got it, or around that range. So I quickly put in my 2R here. Return to risk, twice as much as what I'm risking, so 2 to 1, 2, and then this is 3 to 1, and it hit both of them. But I got out at, I think it was pretty much 1 to 1, and this is what fear can do for you. I got a little too nervous. I said I could have done a number of other things to mitigate this, or at least make it. And you can see now, look, it's resting again on the 8 EMA, and it might make another move up. What I could have done was partial out. I took all my shares out here. Just because I was afraid. It's just fear kicked in. I could have partialed out instead, or I could have moved my stop up. It was at 22.87. I could have moved it up, just below this candle right here, the top of which I got out at. I could have moved it to there, 23.02, close to the 23 mark. I could have, just done a number of things to make this trade better, but instead I just got out. And I mean, I made money, but I just didn't make as much as I could. And one of the things you'll hear if you're a new day trader, a lot of people tell you, is that you have to let your winning trades run, because a small risk like this, 11 cents, could yield, if this gets all the way back to the high of the day, I mean, that could be 7 or 8 R return to risk. I mean, that's pretty good numbers. Like if you're just risking 10 cents and you make 80 cents on instead. Or out of it, then that's amazing. So I just didn't do that. I let fear kick in, and that's what happens when you do that. So this is a learning trade. I mean, really, it's not a horrible one. to have, because I made money on it, and it didn't really hurt me. I could have lost money. I could have gotten out, if it dipped a little bit close to my stop and I got out before it hit my stop and then it bounced back up. That would have been worse, right? Because I would have lost money. But this was unfortunate. But this didn't actually hurt as much. Obviously, like I said, I made money. This did not hurt as much as missing out on this little. This is another little scan I built, proprietary scan, that looks for stocks that are above VWAP and getting near the 200 moving average, 5-minute 200 moving average, not daily 200 moving average, 5-minute 200 moving average. Basically, I call it the wedge because it forms this little wedge, and a lot of times you can get a little pop right above that. But I've been messing around with this. I put a new criteria into it, which is a whole number. So it has to be near a whole number, because it was popping a lot of alerts in here that just were not good. I just didn't like them, and they were messy, and they made me, kind of miss out on some of the good ones. So this one popped up, CVS popped up, and this was, I kind of missed out. I'll show this on the 200 moving average, or the VWAP, popped up at 1018, so it was right about here. It was getting close, but then it regressed back to VWAP. This is where I should have gotten in, either when it was close to VWAP, get in at like 66, right, on a whole number, put the stop just below 65. I mean, less than 10 cents, because then look what happens. It eventually made its way back up, broke through that 200 moving average, and went all the way up as high as 45. So I just couldn't pull the trigger on that one. And I was just upset about it, because this is a scan I've been working a long time on, over a year now, on trying to perfect it, and it's been showing me pretty decent alerts recently. And when I see a good one here, a pattern that I can make a trade out of, I should be taking it. I just couldn't. But that did not hurt as much as TripAdvisor. Look at this one. Oh jeez, yes. So this alert came in at 10:23, not shortly after CVS. 10:23, so it's right here, 3806, right above a whole number, testing VWAP again, 2-bar pullback, and then it went up. And now this is where I wasn't really considering it until this, where I saw this 2-bar pullback, and then it started moving up towards the 200. I should have gotten in right around 3814, 3810. It was kind of moving around a little bit in that area, and I just couldn't pull the trigger. Look, if I had gotten in at 30, right at the 200, 3814. It's all the way up to 39 now. I mean, almost $1 on that one. And I'm just shedding tears over this one. This hurts more than, not getting into this trade hurts more than, getting out too early from that other trade. At least I made money on this. This I just couldn't pull the trigger, and it was just a beauty. So that hurt a lot. But, it's always good to be cautious. If you're a day trader, yesterday I had no recap. I did not take a trade at all. I didn't feel comfortable in anything, and I've been trading for over a year, so I'm still trying to get down a good trading strategy. But if you're a new day trader, you're going to feel like you need to be taking trades, lots of them, or even just a few a day. You don't. Sometimes the best thing you can do is not trade, because obviously you're not going to lose any money that way, and you can still study the market and study the movement of stocks and patterns, and still learn from it on a daily basis, even if you're not taking a trade. So, there's a difference between being cautious and having trade lock, and just not being able to pull the trigger ever. That miss of Trip, I really should have taken. That was kind of trade lock. I should have gotten into that one. Same maybe for CVS. But it's okay to be cautious. Like yesterday, there was a number of stocks that I put little markers on saying, oh, maybe I would get in here, and it would have been a bad trade. And so avoiding that as a new day trader is key. So don't ever feel like you need to be trading constantly, or even on a daily basis need to be making actual trades. If you should be doing anything, it should be paper trading. So those were my trades. Again, kind of blew it with Liberty. This was the other thing about this too, is if you look at the 15-minute chart without pre-market, because you don't want to use the I do use pre-market here just because sometimes I need to see what it was doing in the pre-market, but then it messes your moving averages, and the 10 exponential moving average on a 15-minute chart is really key. So you can see on this chart, where is it? On this chart, like I said, it was harshly down today. Then where I got in, there was a lot of room between my entry and the 10 EMA. And now look what it did as soon as it got to that 10 EMA, right? It hits its head right on it, and that was my 3R right there, and it kind of broke above it a little bit. But look how it keeps batting its head on this EMA right here, right? So that should have, when I exited here, I had so much room between there. I should have waited for it to at least hit that. If anything, I could have gotten out at my, 3-to-1 reward to risk marker there. But now, see, if it does break above that, I mean, it could be a possible reentry. I'm not sure if I have the stomach for it right now. But if it makes a move above this EMA, that's significant because it's been using it as resistance. If you're new to day trading, this is also a key point. Anytime you see a stock using a moving average as a resistance for a significant period of time, like this is about an hour now, is using that as a resistance, and then it fails to break it and it moves down, that's maybe a sign to get in short because it cannot break that moving average. If it eventually does break that moving average, let's say it moves down a little bit more and then pops over it, that's very significant because it was using it as resistance but then broke it, which is like opening the floodgates for a lot of buyers. They say, okay, finally it's above it, I'm going to get in, and it causes the stock to move up. So it's very key to these moving averages. The 15-minute candle chart, 10 EMA, that's key. That's one I use a lot. So that's one I would definitely recommend. So that's my trade. Yeah, see, it had a nice little movement here. Breaking above VWAP. I got in and out a little too early. Maybe it fails and goes back down, but I still missed out on a little bit more money on this trade, and I'm upset about it. So hopefully come back tomorrow. I might trade a little bit more today. We'll see. If there's nothing there available, I'm not going to do anything. So good luck and see you next time.